Yahoo Finance paying close attention to shares of AT&T, the company purchasing all of Lumen's mass market fiber business for $5.75 billion, I should say, will help the company offer more fiber options across the United States. Let's bring in AT&T Chairman and CEO John Stankey. John, always nice to get some time with you. So $5.75 billion for a brand or an asset that has 1 million customers, that's a big price. Why did you feel you had to pay that amount?
Hi, Brian. It's good to be back with you. And I think it's just a continuation of what you and I have been talking about, which as a company, we believe very strongly that ultimately consumers want to buy their internet service from one place, whether they're on the go and using a mobile phone or at home, entertaining themselves or doing important business. And what we're picking up is a little over 4 million past households. You're correct. There's only 1 million customers, but that's part of the attractiveness of this. We believe we can actually penetrate that base quite a bit more effectively, especially when we invest more heavily to grow the footprint and get the scale that's necessary to compete in fiber. So when you think about where we stand today, by the time we reach 2030, we'll have doubled our fiber footprint from about 30 million passings to 60 million. And we'll pick up probably a little over 10 million from this particular footprint that we're picking up from Lumen as we develop and build it out. So we're really excited about that opportunity, not only because of broadband, but these happen to be in markets where we're a bit under-positioned in share in our wireless business. So to the extent that we can do better on fiber broadband, we think in Seattle and Phoenix, in Denver, we can actually lift our share of wireless as a result of this. And that's kind of a twofer if we pull that off the right way.
Is that the not so secret play here, John, that you sell, and you've called it converged in the past, but let's say bundles, where if you're a fiber customer, now you're going to belong to AT&T Wireless, and ultimately you will pay a higher price for all this stuff?
Well, you're buying two services and you're certainly getting better functionality as a result of putting them together. And yeah, you're going to end up paying for each of the services, but you're going to be getting a value that's better than if you were out splitting them between two other companies. And as the forward momentum of our product development increases, you're going to get other features and benefits of having the two together. So for example, in the unusual event that your fiber goes out, the gateway will automatically back up to your wireless service. So until we can get out there to repair it, you'll have that kind of backup capability. And those types of things are really important to our customers who expect high value services.
Why is the competition so fierce right now for these fiber assets? I see what Verizon just acquired officially a couple weeks ago with Frontier. You have T-Mobile tying up in a joint venture with Lumos. Take me inside the state of play in the industry a bit.
Well, because fiber is the best technology and it's going to be the best technology for the future, and they're all trying to catch us. So they're all flailing around trying to make sure that they can try to collect some footprint. And I think we just made a big move here that's going to not only increase our lead, but extend it further.
The cable companies must really hate what you guys are doing.
I can't speak to how cable's reacting. I can tell you that customers seem to be voting with their feet.
You mentioned that the deal is expected to close in the first half of 2026. How confident that you can get this deal passed inside of administration that coming into the year, many CEOs thought it was going to be a friendly administration to do deals. Not necessarily has that been the case.
Yeah, I think there's everything going for this deal when you think about it. First of all, we're investing in great infrastructure that makes the U.S. economy more competitive. We're going into footprints and markets where the previous owner didn't have the wherewithal and capability to do that. So we're going to step up investment of this world-class infrastructure that I think is right on policy for U.S. competitiveness. When we do that and we start building and investing, we hire people that have to trench and work in local communities to get that done. When customers buy the service, we hire people that shows up at somebody's home to actually install it and put it in and service it. And when you think about the dynamic of somebody investing in that infrastructure, it creates a more competitive market, which ultimately is great for the consumer as well. So it's really hard to see where a company like ours that has a bunch of good, solid, middle-class, union-represented jobs working in these communities isn't going to somebody's going to look at this and say, we not only want this, we want this fast.
No, it makes a lot of sense, John. But going back to what Verizon and T-Mobile have gone through to get their deals passed, Verizon had to roll back certain DEI initiatives to get a sign-off from FCC Chair Brendan Carr. Same deal with T-Mobile. Are you prepared to make that same call? That if the administration says, John, we want to see roll back DEI, if you want to get this deal done, we're going to do it.
Well, we don't have to roll back anything, Brian. Our policies and our approach around AT&T have always been that we progress people on merit, that any employee that comes to work here should have an opportunity to grow their career, work on building their skills, have an opportunity to succeed and earn a living. And we want to help them do that. We want to help all of our employees do that. And that's always been our policy, and it will be our policy going forward. And our goal is to make sure that every employee that walks through the door of AT&T feels like they belong here, and it's a good place for them to work. And I'm pretty confident that anybody who examines our practices and how we run the business is going to come to that same conclusion.
So it sounds like you may take a different approach than your competitors in trying to get this deal closed.
Well, I don't want to prognosticate on the future when I have no idea what's going to occur. But as I said, there's an awful lot of good things for this deal where it makes perfect sense. And I feel like we run the business in a really responsible manner. We're right in line with the kind of things that this administration would like to see moving forward. So I can't wait to tell the story, to be honest with you.
John, before we let you go, I recently talked to the CEOs of one of your biggest competitors, T-Mobile, and it was on the topic of tariffs. Now, he told me his company will not eat tariffs. These prices, if smartphones go up, he will pass them on to consumers. Is that the same vibe over at AT&T?
Well, first of all, I don't know what's going to happen to smartphone pricing yet. As you know, we're sitting in the middle of kind of a transitionary period where the administration is trying to decide on what its final position is. And ultimately, it is the device manufacturer like an Apple or a Samsung that will set the price that they'll turn back to us. So not knowing that they've changed anything, if they should increase the prices because of tariff-driven costs, like in the past, I would expect that probably that flows through to the consumer. Now, handset prices have been going up with or without tariffs over the last decade. And we've done a lot of things in how we brought those products to market to try to help the consumer get through the fact that that device is getting a little bit more expensive. Sometimes we extend the amount of time that the individual pays for it, or we do different things on return pricing to help offset the actual first cost purchase. We'll continue to work with consumers to find a way to try to make sure that they've got a good, solid device to be able to use our network and carry forward. But I do ultimately expect if the device gets more expensive, that the consumer will probably over time have to bear that price, or they'll make some decisions such as hanging onto a device a little bit longer.
I know, John, you and I have talked in the past. You are an avid economic data watcher. It's just what you do. To that end, have you seen any signs of stress in your customer base as these tariffs start to hit the economy? Of course, we saw first quarter GDP decline. Consumer sentiment has now started to weaken for 5 straight months. Any signs of concern in your business?
You know, unfortunately, or fortunately, I guess maybe at AT&T, we're really not a leading indicator. I think that you tend to find other parts of the retail segment that maybe have better indicators if you're at the early stages of an economic decline. Our products and services are so essential to people's everyday lives. It tends to be something they hold on to for a very long period of time before they start making a decision of either not spending or spending down. I've not seen that in our business, Brian. Our business still is very strong. Customers continue to buy the services and they continue to pay us for them. And we feel really good about where we stand right now.
Good luck on getting this deal across the finish line. Again, AT&T looking to purchase all of Lumen's mass market fiber business for $5.75 billion. AT&T Chairman and CEO John Stankey, always good to see you.
Good to be with you, Brian. Thanks for your time.